I'm recording this as we're getting earnings in Microsoft. And the cool thing about what's going on with this is we get to step back and look at not necessarily the move that Microsoft has made. I'll get to that chart in a moment, but where we were at the end of the candle for the 24th. Now, for those of you that may not be familiar with why am I talking about Microsoft or Google, my futures traders know this is an NQ conversation primarily, NQ futures, and then it's an ES conversation. Heck, even the Dow is going to be affected by the weighting Microsoft has in the average. All right, so there's very little that's going to escape the reach of the Microsoft earnings release, and then even at a sector level, that's XLK. So think about the impact. Now, there's a way that I like to do this, and this is going to be really easy. I'm going to show you how to do this. I'm going to replicate it right now. Go ahead and drop a vertical line on the day of the earnings, and that's the 24th. All right, so 10/24, I'm going to go back to 9/24, and if that is a weekend here, just go to maybe the day before. So that's more or less 9/24. That's the 4 weeks leading into earnings, right? Now, as we get about 1 week into earnings, maybe 2, so that would put us around the 10th. All right, we're going to start to see implied volatility move higher. Now, in this window, as the implied volatility moves higher, the premium goes higher, and it starts to favor people who write credit over people who like to buy, right, the debit. It's going to favor the folks who trade credit over debit. And that's where this window right here is not where I want to engage Microsoft. 4 weeks out to about 2 weeks out, right? This window here is what I'm looking at, from here to about here. So think about your opportunity window first, all right? Now, Microsoft is generally bullish. Now, why would I say that? It doesn't matter if it's a NASDAQ stock, doesn't matter if it's a Dow stock, doesn't matter if it's an S&P stock. The first thing I'm going to do is ask myself, am I above or below the 200 exponential moving average? Right? That's step number 1, if you will. I'm also going to take a look at the multi-trend down here. And that's the lower row. So those are the first 2 things that I'm going to determine as far as my sentiment goes. It's tough to be a bear when a stock is above the 200. So I'm going back. I'm not taking a look at where Microsoft is right now. That's irrelevant. What precedes earnings in terms of expectation for movement, and what's the window in which we would look to build a position? So if I'm bullish Microsoft and it's not trending because we have this yellow market structure, right? So I can't play mean reversions. I'm not going to trade pullbacks to the wave. I'm going to play pullbacks to the daily price movement range. That is what I'm looking for. And I want to basically start that opportunity around a month before earnings. And I'm going to stop about 2 weeks out. So it leaves this is one window. It's probably my favorite window. This is the way I'm going to set this up in that 2-week window. How many times in the 2-week window, right? So if I have earnings on the 24th, I'm going to drop my vertical line on the 24th or 25th, right? Whatever that may be. And as long as it's on a Saturday and Sunday, that's why you might end up with a line not exactly in line with going back. Okay. How many times do we hit the daily price movement range, right? Or even the 200 if that's possible. Here, 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 and here. So there were 4 opportunities. This is specific to earnings, gang. There were 4 opportunities to take advantage of the daily price movement range on the daily time frame. All right? So 4 opportunities. So now we know what our time window is. This is what we call this the countdown to earnings, the 642 window. 6 weeks out, what's the 6-week meaning of this? The 6 week is I'm putting a list together. 6 weeks out, I want to start getting a feeling for when earnings are going to be for high impact stocks weighted within the NASDAQ, S&P, the Dow, etc. Right? Okay. So by 4 weeks, now I'm really in that window of action, and the window of action is 2 weeks long. Why am I not going to buy puts? Because generally speaking, we're above the equator, the white dots of the 200 propulsion. What am I going to use for my entry trigger? Because without an entry trigger, gang, there's no way for me to say, this is where I buy the calls, right? This is where I buy the calls. And then there's no way for me to know at what point I need to get stopped out, right? To me, as long as we're above the 200 or as long as the DPMRs are holding, that's pretty fair. That's pretty fair in terms of the object being to hold through earnings. So what am I setting up for, right? Am I doing anything yesterday? No, but I could have, right? You'll say, okay, Rog, what about that daily price limit range? Yes, but remember, you're paying a premium because the implied volatility has gone up in the 2-week window into earnings. But I hope here everyone sees why it's a long and only long call setup. All right. So let's go on over to the 5-minute time frame. We'll see where Microsoft is. There it is. It's trading at 348. So this is really a continuation of what was set up in that 642 window. All right, so this is what, let's go look at another one. I don't want to just choose one where this is, so let's go take a look at Google. And again, if I'm a futures trader, why does this matter? This matters because these are high concentration weighted names in the NASDAQ and in the S&P. So let's do the same thing again with, and again, I don't know, how this was going to end. So I love that we're doing this process a couple of times. Okay. So let's do the same thing. 642 window. By the way, if you want to read up on this, go to countdowntrader.com, www.countdowntrader.com. And the Trish boss has put some great write-ups on the 642 window there. Or even just go to Google and search Countdown Trader 642, and those posts will come up. All right. So drop a vertical line. You know what I'm going to do now, right? Rog, this is ridiculously easy. Yeah. So I don't see, notice how I have the 25th and the 22nd. So the 24th was a weekend. You can drop the line on the 23rd or the 25th. It doesn't matter. Just drop a line 4 weeks back. All right. So let's do the same thing here. Now, we already saw what happened to Google. Right? We already saw what happened to Google, but let's talk about how we would build this position, right? And when. So let's go back to the way we break this down. That's your 1 month or 4-week window. 2 weeks out. 2 weeks out means I'm going to drop a vertical line on the 10th. So that's right here. Now remember, in this window, in fact, I should color this red because I don't really want to do anything inside that 2-week window being someone who buys calls, right? Okay. So here is where the window starts. Here is where the window would end. Here's where we get earnings. We're above the 200. You notice that we are above the 200. So once again, I'm bullish. Where am I allowed to buy? We almost touched it here, clipped 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 it here. That's it. 6 opportunities, anywhere from about, call it about 127 and change. The last was right up in here, call it about 135. All right. So remember, you're building the position when price sinks down into the daily price movement range. Okay. Now, if you had bought any one of these, and as Google closes for the day, we're trading at nearly 140, and you say to yourself, Rog, much like Microsoft, you could have made this decision too. Rog, I'm up pretty nicely on this earnings run up. See, this is another exit that you could think about. I'm up pretty nicely on this earnings run up, 11, 12 points. Your calls have gained a lot of, right, premium. I could scale out a half. I could close the whole position. These are choices you can make. All right. Now, let's say you hung on to it. Let's keep in the spirit of what we do with Microsoft. Let's say you hung on to it, right? Remember where your cost basis is. The worst case scenario was about $135. Okay. Where are we right now? And I think a lot of you know we're trading at $130. So here's a great example of when it doesn't do what we want it to do, unlike Microsoft, which is why, gang, I do not like the binary scratch-off lottery ticket approach to earnings. In fact, if we would have exited Microsoft before earnings, did perfectly fine. Exited Google before earnings, perfectly fine. In fact, if you look at the 642 window, it's the run up that I want to take advantage of. And in that 642 window right up, I recommend getting flat before earnings. Okay? I recommend getting flat before earnings. So here we are at 130. But let me ask you something. You know what your cost basis was. Are you taking catastrophic losses here? Not really. Not really. In fact, one of your positions was bought 2 points above where we are right now. Not what we wanted, clearly, but think about the pain of someone who bought calls or took a bullish take with the pricing in this 138 to 140 area. That's going to stink. That's going to hurt. And I hope you see the difference in terms of the timing. All right. What else do we have? And I'll do this one more time. And again, I'm doing this to show you something that we've been sharing for a long time. This is the way that I look at earnings. The emphasis is on the run up, not holding through earnings, but the window to earnings. So that was Google. We did Microsoft. What was the other one? Visa. Okay. So let's pull Visa up. Now, Visa is going to have implications more so for what? More so for the Dow, more so for the S&P. So if you're thinking from a futures perspective, more so Dow, more so S&P, right? More so the XLF, which is the number one weighted sector in the Dow. So same thing. I'm going to go back, right? I'm going to drop a line on the 10th right here. That's the window that kind of closes. So if you want to color this red to remind yourself, that's really where I don't want to be buying anymore. And then I go back 1 month. So that takes me back to the 24th, 25th, whatever it is. Okay, now this one's a little different. We're heading down towards the 200, but we're still above it. So the only way I would look to set this up is with calls, right? It's a neutral environment, got a little shaky in here, but we're still above that all-important equator, the 200 exponential, right? The equator, as I like to call it. So it's calls only. So same thing, Rag, when do we hit the daily price movement range? Okay, and you might say, okay, Rag, maybe this one's iffy. Agreed. This one would be, again, valid. I wish this happened 2 weeks earlier, right? But the only thing I can do is buy calls. And again, neutral above the 200. Okay, so this will be the third example. All right, so let's see what happened with Visa. Again, the setup is the same every time. Now, if I have a trend, which none of these had, it's even better. All right, Visa's trading up at 240. Okay, so let's talk about the bad example, Google, right? By playing the run up rather than the week of, where vol crush is probably an inevitability, right? By playing the run up, thinking 642, not today, right? 642, not today. You're going to be able to position yourself what I believe to be in a lower risk way. Okay, so this is how to play earnings. This is how I play earnings. This is the breakdown of Microsoft, Google, and Visa. What are the implications for equity traders? Obviously, it's to play on the stock, but is it to play about today, or is it to play about the window that preceded in this window of 642, right? And then also the implications for what Google, the Visa, and Microsoft have on not only the sector, but the index. So, of course, Visa is more Dow and S&P, and of course, Google and the NASDAQ will affect S&P and NASDAQ, but mostly the NASDAQ. And that is it, gang. That's the way I break that down. So we broke down 3 of these, and even in the worst case scenario, right? Even in that worst case scenario, it is not debilitating. And obviously, one of the choices you always have is to get out before the earnings result, because you're able to take advantage of the run-up, which is my favorite part of this, into earnings. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.